Okay, well, on this class we're gonna learn about market structure. Okay, so let's go to a daily time frame. Well, let's actually go to a weekly time frame. And let's go over here. Market structure is basically swing high and swing lows formations and the legs of this swing low and swing high formation. First, let's define what's a swing low and what's a swing high, okay? A swing low is one candle that has a lower low and two higher lows to its right, okay? So this is higher low, lower low, because we can see the candle is over here, and higher low. Okay, this is a swing low. And later we have what we call a swing high. Okay, this is a swing high. Lower high, higher high. Okay, this is a swing high, this is a swing low. Okay, so in this case we have our market structure from here to here. Okay, once the market structure is broken to the downside right here, we change our trend. In this case the trend was bullish, and in this case the trend is now bearish, because this is a swing low that made a swing high. Okay, and then we ask ourselves, okay, where's the swing low after market structure break, and where's the swing high? In this case, this is our swing low and this is our swing high. Okay, that's our swing high, this is our swing low. And as soon as we break again and mark a new swing low, this is our new market structure. Okay, our new market structure is this one right here. This is our dealing range. Once price breaks through it, and now this is our market structure. Okay, this is our market structure, this one right here, and we break through it again. We mark a swing low, then we have our swing high that made the swing low. This is our market structure. Okay, in this case we do it again and we have a new market structure. Swing low, swing high, we break through it again. Swing low, where's our swing high? Well, this is our swing high that made the swing low. We break through it, now we change our market structure, and we can use whatever of these three swing lows. In my case, I would use this one because this is the swing low that made a real expansion upward. And this is our swing high. Okay, we break through it again. Perfect. Swing high. I'm gonna use this swing low again because you can see this is a swing low. However, I'm going to use this because this is the real leg expansion. We break through it again. This is our swing high. This is our swing low. Right now we're breaking through it, okay? And this is market structure. Now we can assume that it's likely for this to form a swing low. We're gonna have some kind of retracement in the next few weeks, and then we can continue lower, okay, to get these swing lows over here, and maybe even these ones. Or I don't want to touch this topic right now, or we could just be a ranging market in which, as you can see, this was our ranging market. Swing high, swing high, swing high, we go down into the ranging market again, okay, and this was just a deviation of the ranging market. Okay, we have a deviation of the range, we go back inside the range, and we go down. We could assume this could be one of those scenarios in which we take the bottom of the range. We are right now not showing signs of displacement downwards, so we could assume this could be a deviation and we go up again. However, we cannot tell until we can see on a different time frame the same market structure. For example, right here we had this right here that was our range highs. We deviate from the market structure. We show unwillingness to continue higher because right here the structure was bullish. However, we are not respecting anything of the bullish arrays, okay, that we're gonna touch later on this course, so no need to worry. But we're not respecting any of them, so we can assume that it could just be a deviation of the range. We go back inside the range, and what's likely to go? Well, all this, and this, which already happened. Now it's time to figure out if we're going to deviate and go higher, or just do a retracement on a higher time frame like a weekly to continue lower. Okay, so that's pretty much everything about our market structure. We're just going to do a quick review on the daily time frame so there's no doubts. Okay, on my opinion, we're likely to go higher, but we're only going higher for a retracement. And you're asking yourself, okay, we haven't broken the market structure on the daily. Okay, it's something that I'm going to teach later on in this course, so there's no need to worry. But we do not always need market structure in case to determine when it's a change of the trend, because we could just say, okay, we took all this liquidity of the marketplace and we're likely to retrace to a premium, trap people that only look for market structure, and then we resume lower. Okay, because on this case we could see it right here. Let's say you were one of these people trying to short all the way, while this was just a retracement on the weekly and we went up again. However, the market structure on this was bearish. Why? Look at this. We have this swing low that made the swing high, right? We break through it, we change the trend, and also we go outside of this range. So we're determining to go lower. Okay, you could get trades for a whole few of days because the market structure is bearish. However, you need to determine that your higher time frame is still bullish. So we have a bullish market structure because our swing low is all the way here to our swing high all the way here, and we're just doing a retracement into a discount zone for later on continuing higher. So that's just me clarifying that you need to have context on the marketplace and not just think market structure is it. But do not worry, I'm going to talk about this later on. So I'll see you guys on the next video and talk to you later.